Gold. It's one of the most exciting and, let's be honest, one of the most intimidating things you can trade, right? So if you've ever wanted to get into scalping Xauusd but just felt totally overwhelmed, you are in the right place. We're about to build a super simple step-by-step framework that's absolutely perfect for beginners. And this quote, man, it just gets right to the heart of what makes gold so tricky. Its incredible volatility, where it can swing hundreds of points in a single day, is both the biggest opportunity for us scalpers and, well, the biggest risk for new traders. Our goal today is to help you grab that opportunity while keeping that risk in check. Okay, first things first, let's make sure we're all on the same page about what we're actually doing here. Scalping is a sprint. You're in, you're out, sometimes in just minutes, grabbing small, quick profits along the way. Swing trading, that's the marathon. You're holding positions for days, maybe even weeks. Today, we are all about the sprint. All right, so here's our roadmap. We're going to cover why gold is such a unique beast, the absolute best time of day to trade it, and this is crucial. And then we'll break down 2 killer strategies. Then we'll put it all together to build your very first Xauusd strategy. So let's start with the why. So why gold? I mean, what's the big deal? Well, it's a true hybrid. It acts like a currency, so it reacts to what the US dollar is doing. It acts like a commodity, driven by simple supply and demand. And it's a safe haven asset, which means it's driven by global fear. This crazy mix creates incredible volatility, which, for a scalper, is exactly what we're looking for. And to navigate this, I want you to think of it like surfing. You can't fight the ocean, right? You have to work with its energy. In the market, volume is the wave you want to ride. The time of day is the tide that brings those big waves in. And major news, that's the wind that can whip up a storm out of nowhere. Trading is all about showing up when the tide is high to catch the best waves. Which brings us to what is probably the single most important rule for a new gold trader. Seriously, forget how to trade for just a moment. You absolutely must master when to trade first. Trading at the wrong time is like trying to surf when the tide's out. All you're going to find is choppy, unpredictable, and frankly, dangerous water. You see, not all hours are created equal. Not even close. The market has a really clear rhythm. The Asian session, it's usually pretty quiet, just kind of setting up a nice predictable range. But then, London opens, and things start to pick up. And during that London-New York overlap, it just goes into overdrive. That is our playground. In this table, let's us zoom in even closer. See that little window between 12 and 1500 UTC? That is prime time. It's when the 2 biggest financial centers in the world are both wide open, and something like 70% of gold's daily volume gets traded right then. Just deciding to only trade during this period is the foundation of a seriously powerful Xauusd strategy. Let that number sink in for a second. 70%. What that means is on most days, the absolute highest or lowest price of the day happens inside this specific window. By focusing your attention right here, you're not just trading, you're stacking the odds massively in your favor and avoiding all that low volume chop where most beginners lose their money. Okay, so how do we actually use this timing to our advantage? Now that we know when to show up, we can finally talk about how to trade. And our first approach is the breakout strategy. It's designed to capture that explosive energy right as it's unleashed. Think of the market during that quiet Asian session as like a tightly coiled spring, just building up all this tension. A breakout strategy is super simple. You're just waiting for that spring to finally snap during the high volatility London Open, and then you jump on for the ride. You're trading momentum itself. And here's the playbook. It's so simple. You start by just drawing a box around the high and low of that quiet Asian session. As London opens, you don't do anything. You just watch. What you were patiently waiting for is a strong, powerful candle to close outside of that box. I'm not talking about a little wick that pokes its head out and runs back inside. A clean, full-body close is your signal to get in. This is a classic and really effective beginner Xauusd strategy. But what if you miss that first big breakout? It happens, right? The good news is markets almost never move in a perfectly straight line. And this brings us to our second core strategy, the pullback. This one is designed for traders who want to join a trend that's already up and running. The best way to think about a pullback is like trying to get on a moving train. You wouldn't try to just leap onto it while it's going full speed, would you? Of course not. You'd wait for it to make a brief stop at a station. A pullback is that brief stop. A small dip in an uptrend or a small pop in a downtrend that gives you a much better, lower risk spot to get on board. This strategy is all about one thing: patience. First, you need a clear trend, no guessing allowed. Then, you just wait. You let the market make a small move against that main trend. That's your pullback. The real key is to watch for that pullback to lose steam and show signs it's ready to turn back around. Once you see momentum shifting back in the direction of the big trend, that's your cue to get in. This pullback is our second core Xauusd strategy. Okay, so let's pause for a second. We have the when, our prime time window, and we have the how, our two core setups. But that's not the whole story, is it? What's the final piece of the puzzle that ties it all together and protects you from gold's wild swings? It's the plan. It's that simple. A strategy tells you what a good setup looks like. But a trading plan, a plan gives you your rules of engagement. Honestly, without a simple, repeatable plan, even the best strategies in the world are going to fail. This is where we turn all this theory into real action. And this brings everything together into a simple 5-point checklist. Number 1, you trade only during that high probability London/New York overlap. 2, don't try to be a hero and trade everything. Just pick one strategy, breakout or pullback, and get really good at it. 3, wait for an A+ setup that perfectly matches your rules. If it's not perfect, you don't trade. 4, know where you're getting out, both for a loss and for a profit, before you ever click the buy or sell button. And 5, and this is huge, protect your account by risking a small, consistent amount on every single trade. You know, ultimately, your entire plan boils down to this one simple sentence. You wait for the highest probability time of day, and then you wait for the highest probability pattern that you've decided to master. This simple combination is the heart and soul of your first successful Xauusd strategy. And I want to leave you with this one last thought because it's probably the most important thing we've talked about today. A strategy that tells you when to enter the market. It gives you an edge. But discipline, true discipline, tells you when to stay out. It's what keeps you in the game long enough to succeed. Knowing when not to trade is what separates the amateurs from the pros. So, which do you think is more important? That's the real key to turning gold's volatility into your biggest advantage.